Hey everybody, I'm joined here today with Cherry Chan, whose name is synonymous in the investing community. She is, if you don't know who Cherry Chan is, she's an expert real estate investment accountant and also a very successful investor in her own right in both the real estate world as well as the stock world, and is really one of the leaders in this space. Spoken at forums like the Toronto Real Estate for the Toronto Real Estate Board, at her own Wealth Hacker conference, which she hosts with her husband Erwin, and is the author of the Complete Taxation Guide to Real Estate Investing. So thank you so much, Cherry, for joining us today for this quick question. We were talking with our clients, and they were asking us, which I'm going to now pose to you, what's the biggest mistake that real estate investors make when setting up their accounting? Maybe you can kind of guide us through what you think that might be.
So thank you so much. First of all, I need to say thank you so much for having me. One of the most often asked questions in my business, in my practice, accounting practice, is that whether they should set up corporation. Or I think one of the biggest mistakes is that they do not understand the implication of setting up a corporation or why they should set up a corporation to own their real estate investing. In the accounting industry, there is a one-sided opinion saying that, okay, there is no benefit for you to set up a corporation from a tax perspective. And to a certain extent, certain tax expert would tell you, okay, you pay more taxes setting up a corporation. But people often don't look at their particular situation, have the proper consultation with an accountant that knows everything, and specialize in working with real estate investors to understand and dive deeper as to whether they should set up a corporation or not. And just listen randomly to different people who just hold one-sided opinion, essentially just from a tax perspective, and ignore the rest of the decision factor. And so they started off owning all their investment properties. I've known an accountant himself. He's not a tax accountant, but I've known an accountant himself. He's owned over 10 properties in his personal name. Imagine owning 10 properties, rental properties in your personal name, the amount of legal liability that you are exposed to. Mm-hmm. So that is one of the many reasons why you would consider setting up a corporation. It's not the only reason. The other thing is that people need to recognize their goal, their long-term goal. Incorporation is not for everyone. And typically speaking, I only advise my clients who really fit into the criteria to set up a corporation to set one up. Otherwise, it's better to own them in the personal name. Financing is also another consideration. If you are planning to buy a lot more properties, having the proper structure in place right from the get-go really matters, because you can put the mortgage directly inside the corporation. Sometimes it helps with the future financing because you put it in the corporation, it's no longer in your personal name. Sometimes it is also the fact that you own a small business. If you own a small business and you don't need all the money, then it's much faster for you to use the money in a corporate environment to invest, rather than taking it out, pay another layer of personal tax, and then invest in your personal name. So all these factors come in together to make a big decision in terms of setting up the structure. But this should be done ahead of time, not after you purchase 3 or 4 or 5 properties. And to unwind that 5 properties in your personal name and put it in the corporation, it could be really costly. Yep. And so that would be the short answer to your question.
Yeah, it's funny because so much in real estate investing, be it the accounting and taxation side or the investments themselves, is it depends answer, right? Because it really does matter what that personal situation is. If somebody asks me what's the best real estate investment, well, it depends. If anybody's giving you a straight answer on this stuff, they're not really looking at your personal situation. So, if you want to hear more about this in greater detail, Cherry is we're blessed to have Cherry come and speak at our event, which is Wednesday, May 19th. Starts at 7 o'clock. We're going from 7 to 9. And if you want to learn more about what fascinating things Cherry's up to, you can follow her on Facebook, Instagram at Real Estate Tax Tips, I believe.
Yes.
Yeah. And yeah, YouTube, she's everywhere. So just give her a Google. I'm sure you can find. So thank you so much, Cherry, for your time today.
Thank you. Looking forward to see everyone.
Yeah, we'll see you Wednesday, May 19th.